Hi, I'm Keith Schaefer. Everyone has heard about the incredible amount of oil and gas that's being produced in North America, particularly the US and all of its new shale plays. Well, we saw what happened to natural gas prices because of that. They went down so much because supply was so great that none of the companies could make money. And actually, I think that could happen for oil this year in 2014. Now, all these low energy prices is going to be very bullish for the American economy. That should be a very big deal to help the Dow and other indexes power higher. But it might not be so bullish for energy producers. So if we're investing in the energy patch this year, where should we be looking to make money? And I think one of the major spots is going to be energy services. Now, energy services is companies that do the drilling, the fracking, the maintaining of all the pipelines, the laying of new pipelines. And people don't understand just how corrosive, for example, oil and gas really are. You were talking about hot oil and gas that are very corrosive coming out of the ground and going through billions and billions of dollars worth of infrastructure, pipelines, refineries, and all that steel and iron has to be maintained. And the companies that get paid to do that make a lot of money. So I'm thinking that this year, energy services should be one of the big bright spots in the American energy stock scene. Now, there's one company in particular I want to bring your attention to, and it's in what I'd call the sweet spot of the energy services sector for a few reasons. One reason is that they're just now, this year, going to hit $100 million in top-line revenue. And that's a big deal, because what that means then is that the institutions that are focused on energy stocks can buy this stock in a big way. Up until now, this has mostly been a retail stock, and they've raised a bit of money here and there and built up some new divisions. But what's happening right now is that growth is happening so fast, they will probably triple their cash flow this year. And that's all going to be from organic growth. So low cost, high margin growth. So that has me very excited about this company, because I really believe that the institutions are going to be able to buy a lot more stock than they have in the past. We're going to see analyst coverage on this stock in the very near term, with target prices anywhere from 50 to 100% higher than what the stock is trading for today. Now, that does not guarantee the stock is going to do that. It is going to go that high. But it does give a very strong sign to investors that the street is starting to get behind the stock. And the reason that everyone has got so excited really is two divisions that this company has. One division is growing so quickly, the only holdback to its growth is that its supplier cannot deliver product fast enough. This is a product that is used all over North America, and there's actually another company out in the industry that's a pure play in this sector that has seen their stock go from just over $5 to $90 in the last 5 years. Very profitable business, very profitable sector, and now this company is moving into that sector in a big, big way. In another division, what they're seeing is they use a heating product for pipelines that is just really selling like hotcakes. So what we're seeing here is strong organic growth, and the other thing I like about this company is that its profit margins are higher than almost any other company I see in the energy services sector. So even across all their divisions, their profit margins are higher than average, which would be about somewhere between the 25 to 30% gross range. This company has higher margins than that. So that's why I think this year we're going to see great things out of this one company. I expect their cash flow to triple. So, and when you apply a very normal 6-7 times multiple on that, it's very easy to see the stock performing well. So I've done a lot of research on this company. I've put together a brand new report. Early this year I met with management, and that's really important for me. When you get into these junior stocks, in this case more an intermediate stock now, you still want to meet with management. You want to meet with the guys who are running the company and the guys who have their boots on the ground in the industry to get some direct feedback on how things are going. So I'm quite excited by this stock, and it's one of the few that I think this year has potential to make shareholders very happy. And that's why I'm talking to you about it today. I want you to test drive my service with this stock. I think it's one of the best on the board in 2014, and I expect great things to happen for it. So we're giving a special offer for this stock, and when you click here, you'll get all the details. Thanks for watching. I'm Keith Schaefer.